Should you apply for a loan to pay off your credit card balances? Let's talk about the good and the bad behind that. Sturgis Credit Repair is a 5-star rated online credit repair company. We help people just like you build or rebuild their credit scores. If you have no credit history, we offer products to help you build credit history so that you never have to depend on anyone co-signing for you. If you have bad credit, enroll into our service today and allow us to work on the negative items affecting your credit scores. We take no money up front, so start our service today for free. You'll get updated through your online account as well as receiving updates through your email. For those who are trying to buy a home, we're partnered with multiple real estate agents and loan officers who are ready to assist you with your goals. If you are a real estate agent, loan officer, or anyone dependent on customers with good credit, create a free partner account with us today. You can manually send or receive clients through your online account as well as track their progress before they go to someone else. Visit our website to learn more about our services. As we all know, having credit card balances reporting to your credit reports hurt in two ways. One, you're paying a lot of interest on unpaid credit card balances, which means after the due date, you still have a balance reporting on the credit card. You only paid the minimum payment. Therefore, you're getting like 25+% interest added to your balance every single month. And the second way, unpaid credit card balances reporting to your credit report is going to damage your scores a lot. So that is what you call credit card utilization when you have unpaid balances on your credit cards. So those two things are really going to hurt you financially and as far as your actual overall credit score. So a lot of people reach out and say, hey, I have all of these credit cards. I have 5 credit cards. They're all maxed out. I should just get a loan and just pay these credit cards off. Is that a good or bad idea? So let's talk about both because there's truly no wrong answer to this. However, there is a smart and a dumb decision as far as, taking a loan to pay off credit card debt. So the good thing is, credit scores are all built on, establishment, which means if you have a lot of positive accounts, then, less things are going to hurt your credit scores. So I have people right now with 750 credit scores that are enrolled in the credit repair service, and they have the same amount of negative accounts as somebody with a 500 credit score. So a lot of people are like, how does this person have the same amount of late payments as me, but their scores are 200 points higher? It's because they have a lot of positive accounts reporting to their credit reports. So the good thing about taking out a loan to pay off credit card debt is that you're opening a new positive account. So let's just pretend there's no late payments on your credit cards and you only want to get a loan to pay off the credit card debt. So therefore, you're opening up a new account, which is a extra credit line on your credit reports, which means your credit is going to be more established because now you got the credit card accounts and now you have this new loan that's reporting too. So you got a better chance of making your credit scores more established. That's a good thing. Zero credit card utilization. So if you get a loan to pay off all of your credit cards, your utilization can go from 100% to 0%. Your score is going to skyrocket, over 100 points just from going from a maxed out credit card to now a credit card that's paid off in full and it's reporting as paid in full. You're going to have less bills, especially if it's multiple credit cards. So let's say, again, you have 5 credit cards that you're barely making, the minimum payment on. All 5 credit cards have 5 different due dates throughout the month, throughout a 30-day period. That's way too many bills to keep up with. Therefore, as a loan, if you get that, you're only making 1 loan payment per month. That's going to pay off all of your credit cards. Another good thing, that may not be too big because I'm going to talk about that next, is the interest that you're paying on the balances. So like I said, credit card debt or credit cards in general have like 25, 27% interest rates. As if you get a personal loan, which is still high, you may be at 15% interest. So overall, the interest is going to be lower, a whole lot lower if you get a loan. Now, let's kind of switch things up here. Let's talk about the bad. Again, if you get a loan to pay off credit card debt, chances are your credit cards are maxed out, which means you have a lot of credit card utilization reporting to your credit reports, which hurt your scores. So your scores kind of suck right now. So if you apply to get a loan right now with your credit cards maxed out, you're probably going to get a super high interest loan. So if credit card interest is 25% and you go out and get a personal loan to pay off this credit card debt, and if the loan is 30%, well, you're going to be paying more money in the long run. So that's really not going to help you. And secondly, if you get a loan to pay off credit card debt, your debt to income ratio is what banks look at whenever you apply for something to see if you can really afford it. Your debt to income rate percentage is going to increase. So with credit cards, you have minimum payments, which are like $25 or $30 a month, versus a loan, a 2 or 3 year loan, is now $400 or $500 a month with a 30% interest rate. So if you're trying to buy a car or a house, they're going to say, well, your debt to income is way too high with this $500 personal loan payment every single month. We don't think we can approve you just yet until this loan is paid off. So it kind of have its pros and cons with credit cards, or paying off credit cards with a loan. So that's why I say there's truly no wrong answer to this. It's all going to come down to each individual situation. So there's pros and cons behind this. So if you have any questions regarding if you should pay off your credit card debt with a loan, definitely reach out to us at Sturgis Credit Repair. We may have some products to help you pay off those credit cards sooner. We may be able to get you some funding to pay off those credit cards. Another option is to always keep applying for more credit cards so that your credit card utilization kind of balance out. So those maxed out credit cards isn't really reporting a high utilization because you have more available credit. So thank you for listening or watching this episode. If this video helped you, be sure to like it, comment, share it, and subscribe to this channel for more helpful videos like this one. Thanks for watching.